Hi everyone, welcome to the new edition of the Minute of Taxes. And today we are going to share about an important topic, which is what? The difference between refundable and non-refundable tax credit. And I'm bringing this to this live today because during the weekend, today is Monday, during the weekend, I have to be on the 4 hours like tax preparation with one of my customers because he couldn't understand that some credit that he had could not be taken into his taxes. And it prompted me to say, okay, you know what? Maybe I know him. He could understand what I'm saying because I'm trying to educate him. But a lot of other people out there don't understand, and it's hard for them to understand. So it's better to have a video where you can break down some component of this topic so they can understand much better and get prepared when they're going to prepare the taxes. And the topic is, what is the difference between the tax credit, the refundable tax credit, and a non-refundable tax credit? If you know the answer, that's a good thing. If you don't know, I think the next 4 minutes of this 5-minute video are going to be really benefit to you because you're going to be prepared whenever you have to deal with your tax professional, your CPA. Okay? So in general, when we talk about credit doesn't always mean money, right? Credit doesn't always mean money. Credit means that you're gonna get something without spending money. But it's another way to receive money. If I owe you something and you give me a credit, and I don't pay you back, it means that you actually gave me something even though I didn't pay. Okay? Or I didn't receive something. You give me a credit. So basically, this is what happened with the credit. And unfortunately, most of tax credit in the US are non-refundable. And 90% of taxpayers are not aware of it. When we talk about tax credit, a lot of tax credit we talk about, most of the time, those are non-refundable tax credit. And you have to contrast them with what is called refundable tax credit. Okay? So in general, taxpayers subtract both refundable and non-refundable credit from the tax they owe. So when you owe someone, when you file taxes on your tax bill, what you owe, maybe $5,000. In general, you're going to subtract both those refundable and non-refundable credit against the tax that you owe. But what happens is that if the refundable credit exceeds the amount of tax you owe, the difference is paid in refund. But if the difference, the non-refundable tax credit, if the non-refundable tax credit exceeds the amount of tax you owe, the excess is lost. If you don't understand that, you're going to be at every time in trouble with your CPA because you're going to be telling him that he doesn't know his job. And of course, the CPA should also know what's the difference between those two taxes and be able to explain to you. Most of the time, they just say, okay, this is only what you got. But if they don't explain to you, you will say that he doesn't know his job. So now I'm trying to help you, helping your tax professional. Because the most important thing I always tell you is not only to get a maximum refund or get a lower refund, is to know how you come up with your taxes, how you come up with your refund. It doesn't matter whether you're going to receive $10,000 or you're going to owe $4,000. You have to know how you actually come up with those results. That's the most important thing because it helps both parties. It helps you understand your situation. It helps your tax professional knowing what he's doing, helping you understand the situation. So basically, I just said that the maximum value of a non-refundable tax credit is capped at the taxpayer's liability. That means it's when you actually take that credit against your taxes that you are able to receive it. In another way is that if you owe, for example, $5,000 and you receive $2,000 credit, that means you only owe now $3,000. That is what it means. Okay? So you are receiving $2,000, just that you cannot receive it like in refund, you cannot receive it in cash, is reducing your tax liability. It means that if you don't have a tax liability and you have non-refundable tax credit, they are not going to help you at all. And that's the reason why you will see some people giving up some of their credit to other people because they don't have enough tax liability to be able to claim those credit. And you will be surprised to know what could be qualified as a taxable refundable tax credit and non-refundable tax credit. So in contrast, taxpayers receive the full value of their refundable tax credit even though they owe zero. Simply put, if you have a $2,000 tax credit and you owe $0 to the government, your $2,000 tax credit is a non-refundable. You will not receive the $2,000. That's what it means. But if you owe $2,000 to the government and you have if you owe $0 and the refundable tax credit, the tax credit is a refundable tax credit, you are going to receive those $2,000. So I'm going to share with you a couple of tax credits that are refundable and non-refundable. Of course, some of them are actually partially refundable. Some of them are fully refundable. Some of them are fully non-refundable. But I'm not going to go into detail to explain how much is refundable, how much is not, how much is partially, but you need to know that at least you need to know what is partially refundable. That means if the credit is, for example, $5,000, and that is a partially refundable, it means that if you don't have no taxes to offset the $5,000, you will only receive the refundable portion of that $5,000 credit. This is what it means. But if it was a full refundable, you will be able to receive the $5,000 refundable. But if you have taxes, the portion that goes to offset the taxes will also be refundable to you as additional income. Okay, so I'm going to share with you a couple of course, non-refundable. There are more non-refundable tax credit than refundable tax credit. So I'm going to share with you a couple of non-refundable tax credit. You may not know about adoption tax credit. If you don't want to know what it is, Google, you will know what adoption tax credit is. You have foreign tax credit. I think I went on video maybe 2 days ago when I was explaining about the foreign tax credit. It's a non-refundable tax credit. Okay, it actually helps you to reduce your taxes. When you reduce your taxes, it increases your your refunds, because if you were receiving because the portion that is offset will go to you as a refund basically. But if you didn't have no taxes, it will not offset nothing. That is how it helps you. It helps you in the way that your refund is reduced by the non-refundable tax credit, and that portion that is reduced goes back to you into your refund, into your tax credit, into your tax refund. So we have adoption tax credit, we have foreign tax credit, we have mortgage interest tax credit, the people homeowners. You have residential energy property tax credit. I explained about those energy efficiency tax credit. When you're a homeowner, you use those environment safety way to improve your house. So we talk about credit for elderly and disabled people. Of course, if you are elder, if you have a disabled child or yourself you are disabled, yeah, there are credit for you guys. But those credits are non-refundable. The child tax credit, everybody knows about child tax. That means, what does your child help you? How much do you get from your child? Those are not fully refundable, unfortunately. And people always calculate, okay, I have one child, the child will give me this amount. It's just wrong, because if you don't have the level of income and liability to claim that child, you receive nothing at all. That's the reason why some people will actually leave or give their child away, or leave the child with someone else in the family that has better tax situation to claim the child. Okay, So the child tax credit is partially, it has a portion of it that is refundable, which is a small portion. It's a bigger portion now. With the new law, it's a bigger portion, but it's a portion of it. It's not fully refundable. You guys need to know when you are calculating one child is this amount, two children is this amount, three children is this amount. No, it doesn't work like that. You got to do your research also, or also consult with other CPA to have a better understanding of this situation. So now I'm going to share with you with a couple refundable tax credit. The first one is what is called earning income tax credit, and that was the first or the second video that I made to actually help you understand how it works and how it can go up, how it goes down, how you lose it completely. Yeah, it's a tax credit, but unfortunately also most of those credit has a phase out. That means when your level of income reaches a certain level, you actually lose them, even though they are refundable. If you are not within the range with your income to be able to claim them, you actually even lose them. Okay, so you have what is called premium tax credit. This is for people who pay for health insurance out of pocket. If you are paying for health insurance in the marketplace, I'm not talking about people actually people are paying health insurance from their job. It doesn't count. When you are paying the market, that means you shop online, you Google, you figure out a company to pay for your health insurance, and at the end, the government has to compare to see how much is your actual level of income. They compare with how much you have been paying. If you have been overpaying, given the level of your income, you receive that premium tax credit, which is a refundable tax credit. It will actually directly increase your taxes, even though you don't have no tax liability. This is a refundable tax credit. You have what is called additional child tax credit. So the additional child tax credit is the portion of the child tax credit which is refundable to you. I just told you the child tax credit is partially refundable. That means there's a portion that only helps you to reduce your tax liability. The other portion is refundable. That portion is called additional child tax credit. That's what you receive in your taxes. You also have what is called American Opportunity Tax Credit. This is actually it's an educational credit. That one also is unfortunately partially refundable. And that's the reason why I was arguing like crazily with my friend when he was saying, oh, I pay $8,000 for education. How come I only get 1,000? Unfortunately, because the 1,000 is the only refundable portion of the 2,500 that you are actually allowed to get, because the maximum you can get for American Opportunity Tax Credit, which is educational credit, you receive it when you have what is called for 1098T from school. So basically, on that form, it doesn't matter whether you pay 10,000, 4,000, 20,000, 8,000 for the year. The maximum credit you can get is 2,500. And if you don't have tax liability for the non-refundable to go there and reduce that taxes, you will only get 1,000. I'm not saying that. I'm just sharing with you what the law says. So you have to stop to tell the taxpayer that, so why didn't you take my education? I spent 4,000. I only get 1,000. Why? So that's the reason now. I'm going to stop here. I didn't plan to do that long. Maybe on the different video. In the different video, I will actually share with you what is the percentage that you can get for each of those tax credit. What portion is actually partially refundable? What portion is what portion is not refundable? I will most likely share those details because I don't want this video to be that long. So if you're new to this channel and you like what you just listened now, the first thing to do is to like and to let us know what you feel by posting a comment on the description of this video. And more importantly is to share, subscribe, and share and share and share, because we are trying to reach the 1,000 on the YouTube channel, so we can actually do this directly from YouTube instead of moving from one platform to a different platform, because Facebook is no longer reliable with us. Okay, so until then, this was Roussel EA, your tax and accounting specialist. See you tomorrow for the next numero of the Minute of Taxes. Ciao. So I believe that by now you have learned at least one thing that you didn't know about how to legally save in taxes. If you really need to know even more in depth of what you have learned, or even a different strategy of how you can do as a business owner, as a simple taxpayer, I will invite you to click on the link below to see all the other tools or training that I have available for you. See you in the inside.